What's up, everybody? This is Lawrence Linker, Provost of the BitMEX Academy, and I'm here today with Mauricio Di Bartolomeo of Ledn. And we're going to learn about how lending, and borrowing works in the crypto market for Ledn, and what Ledn is doing specifically to meet the needs of crypto users out there. Mauricio, how are you today?
I'm great, Lawrence. Thanks for having me over.
My pleasure. Thank you for being with us. So Mauricio, tell us a little bit about Ledn.
Yes, happy to. So Ledn is a platform that lets you earn interest and borrow, use your Bitcoin to borrow dollars and use it as collateral. So essentially at Ledn, we offer 5 products, and it's a very seamless and easy to use platform. And what we do is we offer interest on Bitcoin and USDC. So the Bitcoin savings account is paying 6.25% on the first half Bitcoin, 2.25% on balances above that. And then on USDC, we pay 9.5% on all balances. And then on the loan side, you can post your Bitcoin as collateral and borrow 50% of the value of that Bitcoin in dollar terms. And you have a year to essentially repay the loan. So what that does is that it lets you maintain ownership of your Bitcoin. You still have the upside potential of that Bitcoin, but you get to access financing without having to sell your Bitcoin. And that is, a lot of people use that product, mostly used by Bitcoin businesses that have Bitcoin income and revenues and want to hold Bitcoin, but they also want to reinvest in their business. So that what they do is they place that Bitcoin as collateral. They get the working capital from Ledn, reinvest it in the business. As the business makes more money, they repay the loan, and then they get the Bitcoin, which, the intent is that the Bitcoin continues to appreciate during that time. And then the other one is people that have been in Bitcoin for quite some time. They've owned it for, since it was in the hundreds, and they have a pretty built up, rather large capital gain built up on it if they were to sell that Bitcoin. So like most wealthy people, you don't sell the asset, you borrow against it. It's much more tax efficient. You get to diversify your portfolio. And that is true whether you have $1 million or whether you have, $1,000. Sometimes you want to be able to use some of that digital wealth to kind of reinvest it into real world asset or real world business. And that's where we come in.
Very cool. All right, Mauricio, a lot to dig into there. So first of all, I think that when Bitcoin and crypto in general sort of first came out, one of the first applications of it was really just as an asset for trading. And that's how certainly BitMEX grew as a business, as the first company to offer derivatives on crypto. And we saw tremendous interest in that. It feels like the borrowing and lending businesses for crypto are newer. And one of the things that's unique about them is that they really offer very attractive interest rates. So most people, we're accustomed to, if we're lucky to get 1% in our savings account, in our bank account, right? But what you're saying is I can go and convert my US dollars or whatever currency to USDC, which tracks US dollars, and I can deposit it on Ledn. And what did you say the interest rate was?
9.5% annual.
9.5%, right? So it's obviously like a really, really attractive offer. But I think what the question that a lot of people would have is, how are you making that yield?
And that's a great question. So there's a couple of things there to unpack, and maybe we can start in sections. So first, to speak a little bit about Bitcoin's evolution from a trading asset to a more reserve asset and sort of money-like asset. And to your point, Bitcoin means different things for different people around the world. In some places of the world, it is just a great trading asset, an asset that trades 24/7, has great liquidity, it has great derivatives around it, and platforms like BitMEX offering great services. So it is a great asset to trade. And so trading platforms proliferated in the early days when Bitcoin was seen as mostly that. Over the years, Bitcoin has come to mean to people, especially outside investor markets, it's actually money. They don't see it as a trading good. They see it as the asset in which they save, the sort of one of the primary assets in which they save. And they're not necessarily interested in trading it. They're actually interested in doing more things that you would akin to do with money in today's financial markets. So most people have money earning interest in a savings account or in a fixed term deposit somewhere. And so that's the kind of services that Ledn offers that are not necessarily, so you know how most banks have kind of their banking platform and their trading platform, and they're not necessarily the same because they're very different activities. And so I think the same is going to happen in Bitcoin. You're going to have these like native trading platforms, and you're going to have these native sort of financial services platforms. That's pretty much the vision when we created Ledn, is we don't want to create another, for lack of a better word, speculating venue or casino. We wanted to create a place where people came in and they had access to these services they were very much accustomed to, but they didn't want to get them. It's difficult to kind of, when you go into a platform and you have 1,000 services and you can kind of pick and choose savings and loans, but that's not the experience that people are used to. People are used to logging in, their savings, their loans, very simple process, very plain language, et cetera. And so that was the experience we wanted to recreate in Ledn around Bitcoin. And to hit on the second point that you said about the discrepancy on the rates, right? Like, why are the rates so vastly different? And I think it's also, that's due to the general evolution of any assets financing life. So my business partner, Adam, co-founder of Ledn, he was financing renewable energy for 10 years before we got into financing Bitcoin. And when that process started, pension funds, banks, they didn't understand solar. They didn't understand how the panels work. They didn't know how long the panels were going to be around for. So like the financing rates start out really high because people don't understand the risk. And it starts at like in the double digits %. But then as people start understanding the risk, and then you have a few years out and a few projects that you kind of look back and say, oh, that's some historical data, and there's no losses here, the capital just keeps pouring in, and bidding down those rates until you have people, 10 years later in the solar, fighting over themselves for a 4% cap. And so we feel the same has been happening in Bitcoin. Is really just one, a lack of understanding, because it's a place that has a lot of moving regulations. The people that have the biggest stacks of cash are slow to essentially put them to work in the space until they have all that regulatory clarity they need. If you look at historically who holds the biggest bags of cash, are insurance companies, pension funds, large banks, family offices, and they are very bound by regulation, mandates, investor mandates, etc. So they've been really trying to dip in, and they are starting to dip in. And as they do, you've seen the rates come down. So when these first Bitcoin-backed loan products first went to market, the rates were at 18%. Wow. So right now they're at 9.5%, and it's been 2 years. So that we see that trend is likely going to continue. And so yes, we can offer great yields today. I think where those yields will trend over time is down as people understand that financing Bitcoin actually, in my view, has even lower risk than financing real estate, because you can't sell a section of a house on a partial default. You can't foreclose a house at 24/7 around the clock. And so it's an asset class that is an absolutely great collateral to finance. I think institutions are waking up to that. And this is the sort of trend that Ledn wants to be leading as more and more people start accessing financing with their Bitcoin or financial services that are more akin to bank-like services today.
Yeah, very cool. And Ledn does a couple things that are quite special. We talked about this last time. Maybe we could talk a little bit about that in terms of, first of all, the regulation, and then some of the capital controls that you guys have in place. I think would be very interesting to hear about.
Yeah, so I guess in the sense of control, so there are many ways of generating the yield in this space. And I think what is happening right now, and what regulators are really trying to understand, is how are these companies generating the yields, and how are they protecting investors, in their operations? How are they basically looking out for the best interests of their clients? And in this industry, as you know, there's the spectrum of risks that you could potentially take is very broad. You could be relatively conservative, or you could go incredibly exotic into very dark tokens or very obscure type of tokens or assets. And so where Ledn sits on that spectrum is towards the most conservative side of that spectrum, because we're a centralized entity, because we have to talk to regulators, and make sure that we're always abiding by the rule sets that are imposed in our markets, particularly Canada. And so that means that we have to do full KYC on all of our clients. We have to fully diligence all of our lending counterparties. We have very strict sort of risk diligence on anyone we lend assets to. And among the things that we do to protect ourselves is, outside of our primary borrower, who is Genesis, we don't, right now, as it stands, we don't lend to any new counterparty in excess of what Ledn's net equity position is. And so we do that in essence to sort of limit the risk of any one counterparty not necessarily doing what we thought they were going to do, and that counterparty not deciding what will happen to Ledn, essentially. And so by limiting how much exposure we have to each one of them, we can ensure that even if in our worst case scenario, we can still recover from it and continue doing business. And so that's really the idea there, is just to make sure that we're always looking out for the best term, for the best interest and the long-term interest of both our clients and our company.
Great. And I think that some of this ethos for you really came from where you grew up and what you saw happen to currency there. Can you talk to us a little bit about that?
Yeah, I mean, so I grew up in Venezuela. A lot of my family is still down there, and that's where I started mining Bitcoin. In that process, I kind of saw a country fail, and as part of a country, going through this sort of process of failing, the money of that country dies. That's like an instrumental part of a failed state. Is most often than not the money fails, and seeing that process of money dying really hits home on how broken the fiat system is, and how the fiat system is really manipulated by a few people, particularly in the government, for the benefit of a minority, right? And that's the cotillion effect that many people talk about. Is that the cotillion effect is something that people talk about printing, and people talk about, right now there's a lot of conversation about printing in the US and what that does to inflation. What we're seeing today in the US is sort of like the very early stages of what happened in Venezuela. Which was this, in the US, it came as a response to this global pandemic, and the economy worldwide was shutting down, and the US kind of did this massive effort to print money and kind of lift the economy again. In Venezuela, what actually happened was that an authoritarian government came in. Most private businesses were very afraid of what this communist government was doing. It basically shut down. It started expropriating a lot of private companies. It started putting a lot of capital controls, because when he started coming in and saying, we're going to print and we're going to do all these social programs and we're going to make it very difficult for companies to basically do anything, people started getting really worried, and they started trying to protect their dollars and protect their savings and buy dollars. And then what the government does is the first thing they do is they start restricting exchange rates for you to start protecting your assets. And if, in that process, there's just so much to unpack on the whole experience. But I think what really stuck to me was this idea that money does die, money fails, and it is a system that is not fair. It's a system that is, when the central bank gets in cahoots with the president, they are at their service most often than not, and they will do whatever it takes to get reelected. And that will happen at the expense of people's savings. And the worst part about that is that who suffers the most from this is the people with the lowest income, because they are the ones that the government should be protecting the most, right? But they are selling them these false ideas that by printing and by creating these social programs, they're going to get, the people are going to be better off, but it's not actually the people that are better off, it's the government that gets reelected, because they keep people trapped in this, their goal there is for you not to understand how money works. And I think that's what people don't, that's to me is something that became very clear, is that there is an agenda so that you don't understand how money works. Because the second you understand how the sausage is made, you're going to run. And there's this sort of almost like this deliberate effort around governments that they don't want you to understand money. How are US politicians really probing turkey prices? Because they've risen now after they printed. Yeah, of course they're going to rise. You printed 40% of the money supply in 12 months. What do you think is going to happen? But no, but they're probing Turkey because corporates are making outrageous profits. That, to me, is a red flag.
And how do you feel like you're helping? I mean, first of all, Mauricio, a lot of passion there, and it's really exciting to hear an entrepreneur, really fired up about something like this and say, I'm going to do something about it. How do you feel like you're addressing this problem with Ledn? And maybe you could talk a little bit about, more broadly speaking, how do you feel like crypto has the opportunity to address some of the issues you're talking about?
Okay, this is a great question. So I think the biggest thing that crypto has done for humanity is, one, introduce a new form of money that is uncensorable and unstoppable. And by doing so, and by being successful, it has made everyone question what is money and how does it work? It is something that feels trivial, but most people in the street, if you poll 10 people in the street right now and you ask them what causes inflation, they won't be able to answer you. Sure. Or they will give you the wrong answer. If you asked that question 2 years ago and you ask that question now, I bet you'd get two very different answers. Because there has been an incredible educational campaign around money printing and inflation and what that can do and how you could protect yourself from it. And it's been led by guys like Michael Saylor, Paul Tudor Jones, BlackRock, like all these massive investors are leading by example and hiding their dollars in crypto and hiding their value in these assets. And that has made a lot of people start thinking, whoa, if these guys are putting their money in crypto and Bitcoin, like, why am I not putting, like, what? I need to double look at this. I need to understand why they're so interested in this. And they're going into monetary policy and they're going into fixed money supply versus variable money supply. And they're going into the Fed website. I would actually love to see what the Fed site's website traffic has been on the last 2 years, because I bet you it's way higher than it used to be. And so people are actually now saying, wait a second, this is how this thing works. That seems a little bit unfair. And they're saying, oh, and this one is transparent. Oh, and this one I can run a node. I can actually audit the supply here. This is cool. And so that's this question. And what we want to do, the biggest gap is education. The second people understand how money works, it's a one-way street to Bitcoin. They don't come back. Like you would have to be a fool to leave a system that is transparent and that you can monitor and oversee and go back to a system that you're just told. And banks like the Central Bank of Venezuela went dark for about 2 years. 2 years of no data. No data. We're here thinking every central bank is like the US. Every month we'll tell you how much we printed every month. Here's a beautiful graph. Here, guys, check it out. It's not how it works in most places. Most places don't tell you what they're doing. And so what we need to do is we need to tell people, look at the value of the dollar, look at how badly it's been inflated away. And to the extent that we can, tell them, hey, you may not be able to, you may not be able to get a digital bank where you live in this remote area of Colombia or this remote area of Brazil. But you know what? If you can get into a P2P market and get some Bitcoin, you can open yourself a Ledn account and you can essentially start saving Bitcoin. Hey, and if you want to have some digital dollars, you can trade those into USDC and you can continue earning Bitcoin. And you will have a much better asset as far as money to hold value of your savings over time, whether it's dollars or Bitcoin. It's probably better than what they have locally. And they have financial services that have better rates than they get locally, better client support than they get luckily. We are, as a compliant company, we respect all local regulations and our Canadian regulations. So we're held up to the highest of standards in our view. And so we are trying to elevate people's options to access financial services. And we're trying to give them way broader access to those services. And more importantly than all those things is we want to teach them why they should use them and how they could benefit from those services, both the risks and the benefits of these services, so that they can get the game and make their own decisions. I think that to us, knowledge is power. So more than telling you to come save on Ledn, we want you to understand why saving on Ledn is good for you, or why holding USDC and earning a great rate or holding a little bit of Bitcoin could be good for your future. That's what we want you to get. And then if you choose to stay on and use Ledn for that, all better. But like, if we get you to understand it, I think that's a job well done for us.
Yeah, I think so too. And I want to say thank you for the shout out on education. Obviously, as the person in charge of leading the education efforts at BitMEX, I can tell you that we definitely agree that the more that people understand about crypto, the more questions that they'll ask about the incumbent system, and the more they'll be able to really make a fair comparison about what crypto has to offer versus what the traditional system has to offer. I also want to address one other thing, Mauricio. It just occurred to me, this was not like a bait and switch or anything, by the way, but we actually just released a savings product of our own, which I have in my background. And it occurred to me like about 10 minutes into this call that, that might seem like a trick. It's not. BitMEX and Ledn are totally different companies, okay? But it's not, surprising that we would maybe be thinking about some of the same things. I hope that's okay for you. I'm happy to redo this whole interview, actually, if...
Oh, no, man, it's totally fine. Don't worry about it.
Okay, cool. But I have a question for you then, because I know it's something that we think about a lot at BitMEX, and I'm guessing it's something you've thought about as well. It feels like we're very much in the early days of crypto fixed income. And when we look at sort of the fixed income markets in the traditional finance space, very, very sophisticated instruments kind of being built on that. And a larger, it's a much larger business than, like the equities business, which you could, possibly compare traditional sort of crypto trading to, right? So what do you think the future of the crypto fixed income world looks like?
It's a great question. I think right now, what we're likely going to see more in the next little bit in crypto is more granularity around the products. I think because they're in such infancy right now, there's a lot of sort of open term products and everything's, we're just going to see a lot of iteration around these products. So for example, I can see this going into the fixed term product offerings versus open term product offerings. And stuff is just going to get a lot more sophisticated as investors look to get, access yield in different ways, different terms. There's also, like, to your point, there are ways of combining existing products out there to create new products. And so I think that, especially in the fixed income markets, that'll be something that you'll see. And so I think, again, just at a high level, I think maturity matching is going to be a thing for the next little bit, for the next probably a few years. And then from there on, you're going to get into the sort of more sophisticated type of vehicles that exist in traditional finance today. But those are typically, only made available to some accredited investors, et cetera, because of how complex some of those products can be. But I do, to your point, I agree. I think we're in the early stages of money markets, or of the crypto sort of money markets. And on the other thing that I think you'll see is also, what may proliferate is these type of programmatic money market pools for very short-term durations, very short-term lending. So I could see things like, Compound Ave having these KYC type of pools where institutions can do sort of very short-term lending. And that would most likely be done more effectively through programmatic than a human, you know. And so I think that that's a trend that's also we may see take off in the next little bit.
Yeah, Mauricio, I'm gonna have to close things out as we want to keep these short. But every time you answer a question, I have like 10 more questions, and I think of all sorts of things that we could talk about. So maybe we can do this again sometime. But
yeah,
for today, I think that was this was really great, man. And thanks so much for your time.
No, I appreciate it, man. That was happy to do it, and happy to do it again.
All right, thank you.